Hello and welcome to another update video about DOT. DOT has seen a substantial decline today, together with the entire market basically. That is not so surprising given that we haven't seen a solid five-wave structure from the recent lows which formed on the 24th of June. You know that we talked about that only in yesterday's video, that this move up is not a reliable five-wave move. Therefore, we need to still consider lower prices, or at least I cannot confirm that this larger correction is over. Now that's the main point of tracking these structures. What we're doing, we are looking at the overall trend. The overall trend here is down since March. Okay, so the micro is bearish. The overall structure is potentially bullish, at least as long as the $4.60 level is holding. Below that level, the bearish micro could lead to a bearish macro. Okay, that's the whole point of tracking the support region. Even though I have to say 460, yes, that's support. The formal invalidation point for any bullish structure is $3.55. But at the moment, the trend is still down. And I'm watching, however, in this area, which we defined, for a potential reversal, for evidence that the trend is reversing. What would count as evidence? A five-wave move up. Well, I've got one, but it didn't reach the $1.618 extension, so it didn't reach the $6.66 level, which was so necessary, right? It was just it was needed for an ideal five-wave structure. Now I don't have an ideal five-wave structure, therefore I don't trust it at all. Nevertheless, I offered a support zone in case we have a wave 2, which is part of a very ugly possible upside move, and that's the other potentially bullish option. All I can offer really. I mean, it might break easily without a clear five-wave move up. This can easily break, but we have possibly just an A wave up, a B wave pullback, and then there could be a C wave from this region. Be aware that B waves don't need to hold the 78.6 fib levels. B waves can go deeper than wave 2s. So if it goes lower and then recovers, it would more likely be a B wave. B waves sometimes form double bottoms. They like to do that, okay? The critical level here that obviously needs to hold ideally here is the red line. That's the 24th of June low at $5.41. I mean, again, the problem is the damage is done already. It hasn't managed to form a solid five-wave move up. Therefore, I don't have a solid trend reversal, and therefore I can't confirm that the low is in. We still need to consider lower prices. However, for anybody who wants to make a bet on it, I mean, we are now very close to that previous low. All I'm saying is we're very close to a previous low, and of course, a pullback, that's the only trade setup that I see here, but it's not a reliable one. Okay, so that's the difference. Probability is still fairly balanced, and the downside pressure is still high in crypto. And as I said, the micro is still bearish. So that means if we now break above the recent high, which formed here at $6.60, I'd first pay attention to a possible C wave that could be developing. For now, even here in the very short term, the trend is down. There has been a bit of a bounce to the local 78.6 retracement at 560. However, this is only in 3 waves, so as well, no clear indication we have bottomed. Of course, again, that could form a larger 3-wave move, is just not reliable, and everything's still too small down here to really count as a substantial bounce. That means, in summary, surely the low could have formed on the 24th, but it is just not reliable and absolutely cannot be confirmed, so consider still lower prices. Next support level is 560, and then also here 541, and below that level 462, which is really relevant for the overall bullish scenario. That's my update about DOT. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.